Hello family, thank you for tuning into this video today. I've got an absolute treat for you guys here. So if you are a property investor, this video is for you. If you are looking to invest in regional Queensland and you have a budget of up to $600,000 or less, I'm going to dive into Rockhampton today and actually pinpoint the top 6 suburbs that are in very high demand right now. So it could be a potential suitor for you for your next investment purchase, because I know the marketplace is absolutely saturated with information and it can be difficult to navigate through. There's a lot of noise out there and it's very hard to cut through and determine and establish where you shouldn't invest, particularly here in regional Queensland, because if you get it wrong in regional markets, it can be very costly for you. So this video today is designed to help inform you of where the best suburbs are in a market like Rockhampton today, so that you can potentially go in and capitalize on a lot of that upside potential that these suburbs have. Stick around, guys. Let's dive in. Before I dive in, just give myself and the business a plug here. So my name is Troy Sumbasani. I'm the owner and head of research of Life Buyers Agency. Life Buyers Agency, we operate on the ground in regional Queensland under these 2 subsidiary brands here. So we've got Capricorn Life servicing the central Queensland region in Rockhampton, Mackay, Gladstone and Bundaberg. Then we've got Tropical Life servicing Cairns and the surrounding North Queensland catchment. We generally work with a lot of property investors each and every week, acquire assets predominantly off market in these areas, and we're really helping those that are generally struggling, that are time poor, that want access to the better quality stock, that don't know what they're doing, and we're generally working with a lot of those property investors. And then we occasionally help the moving home buyer from interstate or intra-regionally, or even internationally. So we've worked with a lot of people over the last 7 years, and we've purchased more than $250 million worth of residential real estate now across regional Queensland. If you are someone that is still overwhelmed with the process, you're not getting the result that you hope you were going to get in the marketplace, you're really struggling, I'm more than happy to have a chat to see if we might be able to add value to the journey. You can visit us on that number there, give us a call, visit us on that website, give us a call on that number, and even jump on my socials. You'll actually see a lot of free content that I put out on Instagram and TikTok as well. And then on our social media pages, you'll see a lot of recent case studies of purchases we've made for clients as well. So hopefully that will give you some further insight around who we are and what we do. All right, let's dive into the top 6 hottest suburbs in Rockhampton. Now, before I do, how I've been able to basically rank the top 6 suburbs is based off a thing called online search interest rate. So basically, real estate and domain, when a property gets listed on there in a particular suburb, people that are searching for properties are going in and clicking on these properties. And when they click on these properties, what they're doing is collating then this data, and then we're able to measure basically which suburbs are hot and which suburbs are not, which suburbs have strong demand versus not so strong demands, by basically looking at how many clicks they're getting for every property that's listed. And we're able to basically create a list today of the top 6 suburbs under $600,000 in Rockhampton that are receiving the most clicks. Obviously, for you as an investor, the demand side of the market is really important, because that's basically one side of the equation you need to get capital growth right. You need strong demand, and then you need low levels of supply. So what I'm doing today is actually showing you already, straight off the bat, where the eyeballs are, where the demand is. And then hopefully by looking at a combination of other data points, we can establish that supply is low and the suburb is still ripe for the picking. So let's dive in and look at the first suburb we got now. So we've got a suburb called Park Avenue. So for those that don't know where Park Avenue is, that sits on the inner north of Rockhampton. You're probably looking at about a 10-minute commute into the CBD, a few minutes from the Stockland Shopping Centre. Yeah, not a bad established part of Rockhampton. It's one of the oldest suburbs on the inner north. So we can see here that the suburb of Park Avenue has been getting roughly 972 unique views per property, which is very high click rates, which shows that demand is really strong in this suburb. It has a median house price of $469,000. Over the last 12 months, its median has actually grown by 30 0.4%. So it's a suburb that is certainly growing. We've seen the median rents here sit at $480 per week, and we've seen the rental market grow roughly 6.7% in the last 12 months. It's not a massive suburb. It's one of the older and established suburbs, as I said, where majority of the stock there, it's mainly been built, I'd say, 40 plus years ago. So it has about 2,000 unique dwellings in that area. From a supply point of view, it's looking very good. And as I said, that's the other ingredient we need as investors to get capital growth is low levels of supply. And as you can see here, stock levels are sitting at 0.3%. And at this point in time, there's only 7 listings for sale in the whole suburb. So from a demand and supply side metric, I suppose, supply is looking low, demand is looking solid. And from a days on market perspective, that hammers that home as well because we're able to look at this click rate and say, hey, look, it's getting 972 unique views per properties, but these people aren't all window shoppers. They're actually buying because it's only taking, on average, most properties to sell in 30 days, which is a very healthy day on market figure, which shows and means that demand is very strong. And from a rental perspective, like vacancy rates are very low as well, well and truly under 1%. And I think that's been the reason why we've had that 6.7% growth rate as well over the last 12 months. Now, this median currently sitting at $469,000. I still think that has a bit of room in it to grow to around that 550 over the next 1 to 3 years. And if you can buy, I would say, in the better pockets of this suburb, away from the industrial area and away from the Fitzroy River pocket, I think you'll do pretty well as a property investor because I find that particular pocket has a lot more owner-occupier appeal, has a better quality stock, and has the better demographic makeup, I think. So, yeah, I definitely still see this suburb having plenty of upside in it. But as I said, you've got to be very picky on what you buy here. Okay, guys, if I had 600K and I was looking to invest in a suburb like Park Avenue, I would buy something like this, which is a 3-bedroom, 1-bathroom, 3-car properties on 607 square meters. 50 Kershaw Street, Park Avenue, on the market right now for 550. I think this is a strategy played by the agent, putting it on the market at a fixed price. I definitely think that's at the top of its valuation. So I reckon this one's likely to sell between sort of 520 to 550. So I reckon this one is very negotiable. But the reason why I like this property, guys, is obviously the block size. I like that it's 2 stories, so you can potentially find these ones that are legal height downstairs and that are enclosed, and you get that additional floor area or inhabitable space, which means that you can rent the property for more, but also they have potentially better value add potential because you can see this one here is 3 bedrooms, 1 bathroom. But if it's legal height downstairs, you can potentially put another bedroom downstairs, turn that into 4 bedrooms and another bathroom. So it'll become a 4, 2, and 3 as opposed to a 3, 1, and 3. So that's why I like these ones. And these dual occupancies tend to be really popular for the owner-occupier market, and renters love them as well, particularly the ones that are enclosed downstairs because you get that additional rumpus space, that storage area, that inhabitable space that you could utilize as an owner occupier or as a tenant as well. But yeah, guys, if I was buying in Park Avenue, I'd buy something like this, and I would stick to the pocket closer to Stocklands, closer to Yamble Road, as opposed to down on the other side of Alexandra Street, closer to the Fitzroy River, because that area is flood prone and that area has a high concentration of industrial properties as well, which tends to put a bit of a stain on that owner-occupier appeal. All right, coming in at number 5 on the list is a suburb called Kawana. So it's actually Park Avenue's northern neighbour. So neighbouring Park Avenue, similar commute time into the CBD, looking at about 10 to 12 minutes, depending on where you are in the suburb. Again, I would say one of the older established parts of Rockhampton, particularly the area closer to Park Avenue, and then there's a newer section towards Parkhurst, a little bit further north. So Kawana has a combination, I would say, old as well as more modern properties as well. And as you can see here, Kawana currently has roughly 990 unique views per property, so just trailing behind Park Avenue slightly there. It's a little bit more expensive, at $560,000 right now in terms of its median house price, and that's predominantly because, as I said, there is a section of the suburb where there is a lot more newer quality homes, and those newer quality homes are selling at a much more higher purchase price and have a tendency to pull up that median house price a little bit higher than its older neighbouring suburbs like Park Avenue and Berserker in and around the inner north of Rockhampton. We can see here that the numbers are pretty good in terms of what it's done in the last 12 months. From a median house price perspective, it's grown by 19.7%, and then its median rent at $550 per week has grown 12.2% as well. So the market is very much on the move here. Can I see that median house price continuing to jump? I think so. I still think a lot of that really nice newer quality stock in Kawana is still very affordable, particularly those brick homes. But a lot of the older stock, the ones that you can get closer to where it intersects with Park Avenue, you're probably looking at them being a lot more cheaper, actually sub 550 purchases. And if you can get your hands on them, and if you're someone with a more of a renovation strategy or you're open to an older home, then my preference would be to lean towards something like that. But if you can push into sort of the newer area of Kawana, you're going to do very well. But I think like this median house price can easily get to about 650 in the next 1 to 3 years. The suburb has a lot on offer, and I think it's a suburb that has plenty of good value for money in it. And look, that median rent sitting at 550, again, I still think that you've got another 50 to 70 dollars worth of rental growth left in this market as well over the next couple of years. So definitely a market with plenty of upside potential. As you can see, it's got just over 2,000 unique dwellings. Stock on market right now is very low. So we've got strong levels of demand and stock levels sitting at 0.3%. So not many properties available on the market at any given time here for purchase. And most properties are taking on average 32 days to sell, which means that most properties are going under contract within the first 1 to 7 days here in a suburb like this. So you as a buyer need to be quite prompt and act fast when opportunities do arise in this suburb, because they don't last very long here. And as you can see on the rental side, vacancy rates are still well and truly under 1% as well. So for me, this suburb ticks a lot of boxes. Got plenty of wiggle room to grow, both on the median house price front and also on the rental front. As I said, it's got a combination of old and new stock, and I think if you can push closer into where the newer stock exists, I think that's the better part of the suburb. And there is some parts of the suburb that are exposed to flooding and also a little bit of public housing as well. So you just need to make sure you navigate through that. But I think for the most part, you'll be fine if you were to purchase a nice house under $600,000 in the better part of Kawana. You'll do very well. All right, now, if I had a budget of under $600,000, this is what I would be looking to acquire in the suburb of Kawana, 17 Casuarina Court. It's a 3-bedroom, 2-bathroom, 2-car property on 747 square meters, brick home, double bay garage for offers over $499. I actually was made aware of this property before it even come to the market, and they were chasing around that 560, 570 range, and I believe it did go under contract for around that. So just be mindful of that if you are buying in Rocky and you see properties that come to a market with a price guide like this. They sometimes go well and truly over the purchase price, and you have to treat every property on a case-by-case basis. And yeah, we kind of knew, like when we saw this one, it's like, yeah, 100% that's going to sell for mid fives, no doubt, because of the location, the property type, the land size, the build quality. It was ticking a lot of boxes there. So just be mindful of that, guys, when you are buying in regional Queensland. Is the sales trickery that comes from a lot of these agents, and can definitely lead you down the garden path when it comes to how they benchmark pricing or how they go to market with their pricing strategies. But yeah, the reason why I think this is a good investment is because of its location. As I said, there's a couple of different parts of Kawana, but if you can push towards the newer part of Kawana where you start to see a lot more of these brick homes, that's where you want to be. And the great thing about Kawana in that newer section is you're actually closer to Heights College, which is one of the popular, I suppose, private schools in Rocky. And then you also got the CQ University not too far as well. And yeah, if you can get close to those sort of big public amenities in that suburb and you own an investment in and around there, you're going to do very well, because I think you'll have no problem renting those properties long term if you can get close to where that university and Heights College area is and push into that newer section of Kawana. Okay, next suburb on the list is a suburb called Allenstown. So Allenstown is located actually on the south side of Rockhampton, so on the other side of the Fitzroy River. That's how you divide the town up. Basically, you got suburbs on the southern side of the Fitzroy River, and then you got suburbs on the northern side of the Fitzroy River. Now, Allenstown sits what I would say 4 to 5 minutes from the CBD. It's actually sitting right on the shoulder of the Rocky CBD. So it's actually one of the more older and established parts of Rockhampton. And it has, I'd say, a mixture of dwelling types. So given its proximity to the CBD, it sort of intersects with a little bit of commercial, a bit of retail, a little bit of industrial as well, and then a section of residential. So that as a suburb, its makeup is a lot more diverse than I suppose many other suburbs across Rockhampton. That's because of where it's located. Now we can see here that it's pushing over 1,000 views per property. So 1,057 unique views per property in Allenstown. Now that's pretty good for a suburb, as I said, that has a mixture of dwelling types, right? And there's only a small section of residential. And I think a lot of people are really pushing into that small pocket of residential in Allenstown because it actually sits on the shoulder of one of the more blue chip upmarket suburbs in Rockhampton called the Range. And a lot of people have been priced out of that suburb now and are looking to sort of move into the next affordable option. So Allenstown has been really interesting. A lot of gentrification happening there now, and a lot of demographic diversity taking place there as a lot of people, particularly young professionals and those that can't afford to move into the Range, are pushing into Allenstown. I think that's what's driving a lot of these eyeballs. We can see here that the median house price is $480,000. And as I said, it sits right on the shoulder of the Range. The Range has a median house price of over $600,000. So you can get into the Allenstown, buy a very similar property, the same land size, the same build type, for 100 or 150, even up to $250,000 cheaper than its neighbouring suburb only a minute away. And I think this median house price, because of that affordability relative to that neighbouring suburb, has plenty of upside potential. I think this $480,000 median can easily push to $600,000 in the next 1 to sort of 3 years. I definitely think that's possible as well. And given that there is only a small section of residential in this suburb, it creates that element of scarcity. So there's only a finite amount of houses that go up for sale. So every time they're going up for sale, people are jumping on them very fast as well. As you can see, over the last 12 months, it's done 29.7% growth. So the suburb's certainly on the move. $460 median rent, and that's done 3.2% growth over the last 12 months. I would like to see this median a little bit higher, but I think what's dragging down this median is, again, I think it's clustered in there with a lot of units, townhouses, and apartments in and around that median density part of Allenstown. It really drives down that median rent. But I know if you can push it closer to the Range side of Allenstown, you definitely get premium rents there over and above like $550 per week for a 3-bedroom, 2-bathroom property, and an older Queenslander as well, but it needs to be in good condition. You can see here that there's about 1,800 unique dwellings. So from a size perspective, it's not a big suburb, it's not a small suburb. It's got a good mixture of, as I said, dwelling types, but overall quite a healthy level of housing stock there. We can see that stock levels are very tight, 0.4%. So you've got these strong levels of demand and, again, low stock. So we're seeing all the right ingredients here for ongoing capital growth. Most properties are selling within 31 days. Days on market is 31 days. That means most properties are taking on average between 1 to 7 days to sell. So if you are looking to buy in this suburb, you're going to be very quick. And the vacancy rate for the rental side of the market sits under 0.4%. So all the data, to me, looks very, very good here, guys. And as I said, I think this suburb has plenty of potential given its proximity to the Range, and it's so close to a lot of other good public amenity that comes with being on the south side. You've got all of the private schools, you've got the public and private hospitals, you've got retail, industrial, and commercial access for jobs. Like it's all there, and you can even push uh, west of Rockhampton to Gracemere and the other industrial areas further west for work as well. So that's why I really like Allenstown as a potential place to invest. All right, if I had a sub $600,000 budget and I was buying in Allenstown, I would look at something like this. So 12 Glencoe Street, Allenstown, recently sold for $495,000. It's a 3 bedroom, 1 bathroom, 2 car property on 870 square meters. What I really like about this property is where it's located and obviously the land content, the dwelling type allows you for renovation down the track. It's quite big and it has character. So these homes tend to be very popular for people that want to add value, renovate it, and turn it into quite a nice. We'll bring these older homes into the 21st century, and they scrub up really nice and tend to value up after renovation. Very, very good. But if you can find this type of property closer to where Allenstown intersects with the range, I think you're going to do very, very well. I think for me, that's most likely where I'd be trying to push into. Otherwise, I would also look at like down even and around that industrial area or even around the commercial or retail precinct and find big land like this and an older home where I know the land could potentially be rezoned and you could develop that land. You could put townhouses on it. You could sell it to a developer to build a commercial precinct. You can sell it to an industrial developer. So that's another potential strategy you could look at if you are buying in Allenstown is targeting houses that have the right zoning in the land to allow for potential resale to a developer or develop it yourself and bring that unique sort of opportunity to the marketplace down the track. But if you're a simple buy and hold investor, want a set and forget asset, something like this closer to where it intersects with the range, you can't go wrong. Okay, moving into the top three now on the list of hottest suburbs in Rockhampton right now, under $600,000. So coming in at number three is Berserker. So Berserker is one of Park Avenue's neighbours as well on the inner north of Rockhampton, and actually very similar to Park Avenue, one of the more older established parts of the north side of Rockhampton, where most of the properties in and around Berserker would be north of 40 years old. So we can see here that the suburb has really pulled in some big numbers here per property. So we can see here that 1,359 unique views per property. So those are crazy numbers there, guys, and it's really outperformed the others on the list that we've just covered off on, by at least 200 to 300 views per properties. That's how much more they're getting, which shows that demand of this suburb is really high. I think what's really pushed a lot of the demand into this suburb is obviously that affordability factor. Berserker, for the most part, has always been an affordable suburb of Rockhampton, but I think as other markets like Frenchville and Park Avenue, Kawana, Parkhurst have gotten more expensive, even Norman Gardens, first home buyers have pushed into places like Berserker to get their, I suppose, foot in the door because of the affordable price point. And like going back 5 years, you could have bought in Berserker for like $180,000. Going back a few years ago, you probably could have bought in there for like mid threes, and now you're in the low fours. And I think that median house price here at $434,000 I can say can get to 500,000 in the next couple of years as well, just because of it being an affordable market. And I think if you can stick to the better parts of Berserker as an investor, you're going to do pretty good, because Berserker has been notoriously known for it being sort of a lower socioeconomic area, predominantly blue-collar demographic, a little bit of social housing there as well, and some sections of the suburb do flood as well, so just be mindful of that there. So you can see here over the last 12 months, it's done 29.7% in growth. The rental market right now sits at $450 per week. And look, that rent, I would say you're looking at that sort of return if you buy one of the sort of typical properties in Berserker, like the older Queenslanders that have been built 40 years ago, a 3 bedroom, 1 bathroom property. You're looking at about $450. But I think the better quality stock, the more modern ones that have been renovated, they're probably pushing up to around that $500 to $550. So just be mindful of that if you are buying there. That rents can vary depending on where you are in Berserker and the type of property it is as well. You can see from a dwelling perspective, it's quite a big suburb as well, a little bit bigger than those other ones we covered off on today. 3,858 unique dwellings. Mixed in there as well as a bit of commercial, a bit of industrial as well, and a little bit of retail. So similar to Allenstown, it's kind of a suburb that has some of those other dwelling types there, and it's sort of mixed in and around that area. Stock levels are very tight, 0.3%. So we've got all the ingredients here for capital growth. Views are up, and then days on market are low as well. So most things are selling within the first few days to average out at around 32 days on market. So again, you're going to be very quick here if you want to buy in a market like this. And the rental side of the market, vacancy rates are really low, so under 1%. So for me, Berserker, a lot cheaper than the other ones we covered off on today, and I still think has plenty of upside to both grow on the rental front and grow on the house price front, but you have to push it to the better quality areas of Berserker, I think. And then you also got to buy the better type dwellings. I think if you can do that, you can mitigate your risk and then potentially maximize your upside there and do pretty well. But yeah, Berserker, very affordable suburb, and a lot of home buyers pushing in there now due to its affordability. Okay, so if I was buying in Berserker for under 600K, I would buy something like this. And guess what? I have bought it. I recently put this one under contract about 6 weeks ago, and we've went unconditional on it 2 weeks ago, and we're moving close to settlement now as well. It was quite a dragged out process because after the billing and pest reports, there were a few things we needed to negotiate on, and it just took a few weeks to get quotes for certain things. So generally, we would have settled in 30 days, but it was dragged out a little bit longer because we were waiting for quotes on things to be rectified and what those costs would look like before we move forward. But yeah, guys, purchased this property for $425,000, 83 Painswick Street, on a 1,300 square meter block. And this type of property is where I think you can make money in a suburb like Berserker because it's like a lower socioeconomic area and it's more of an affordable area, and it's sort of got a mixture of public housing. Like, it doesn't necessarily have a lot of that really desirable owner occupier appeal. So you need to find other ways that you can sort of manufacture value and make money. And the reason why we like this property is because it's sat on that 1,300 square meter block, right? So over a quarter of an acre in town. And the great thing about this block is that it was deep as well. It was very deep, and you could actually have that side access, battle access block, and build a set of townhouses behind it, which is exactly that property next door. If you actually jump on Google and look at it, you'll see that the property next door has done exactly that. So they've retained the existing dwellings and they've built 4 townhouses at the rear on the same size block, and this is what my clients are proposing to do for this one. So yeah, we bought this one off market before it even came online. Sweet deal. I think if it went to market, it would have sold close for at least $500,000, I think, because of that development potential. So yeah, check this one out, guys. Google it, you'll have a look and you'll see what I mean by it having that development potential. And I think if you can find properties like this in Berserker as an investment, you'll do very well. Down to the top 2 now. Gracemere, second place. So for those who don't know where Gracemere is, it sits on the south side of Rockhampton. You're most likely looking at about 15-minute commute to the CBD from Gracemere. So it's about 10 to 15 kilometres outside of Rockhampton itself, and it's one of the more removed residential areas of Rockhampton. But yeah, very popular family area. It's been a very popular investment hotspot over the last couple of years as well, and it still seems to be churning along nicely. So we can see here that Gracemere is getting roughly 1,521 unique views per property. So a lot of eyeballs, have pushed into Gracemere. I think what's really driving that, guys, is like a lot of people that want that more newer brick home or a brick home as opposed to like an example of one I just showed you before, like a Queenslander or a Ted Price style construction in town for under 600,000. They've had to push out to places like Gracemere because that's where the affordable brick homes were. The brick homes that you can see now in markets like Frenchville, in Parkhurst, in Norman Gardens, you'll be looking at paying over $600,000 for a 4-bedroom, 2-bathroom brick home, whereas a market like Gracemere has been very popular for home buyers to push into there and really capitalize on those more newer brick homes. But the only downside is that they've just have to make that a bit longer than normal commute, a longer than average commute into town from out at Gracemere. But as a suburb, it's got everything out there. It's got Woolworths, it's got a shopping centre, it's got a couple of schools, everything is there. So I think the family market has really bumped up this unique views per property over the last couple of years. And you throw a bunch of investors and buyers agents in there as well, they certainly have propped that up as well. So I think that's what's really driving the Gracemere market was that people wanted a brick home, but they were priced out of stuff that you could get in town, so they pushed out to Gracemere as the next best alternative. And we've seen, families flood into that market over the last couple of years. So we can see here that its median house price is $556,000. I think that median could get to 650 in the next couple of years as well. I think that's definitely possible. So a lot of wiggle room with that median house price, I believe, to still grow in the short term. Over the last 12 months, it's done 27.8%. So as I said, it's been getting smashed by home buyers, investors, as well as buyers agents from down south. So it's really pushed up that median. The rents are sitting at $500 per week. So the rental yield isn't too bad. Like, it's probably on the lower side. But yeah, the good thing is that the rental market is growing. It grew by 4.7% over the last 12 months. What I do notice though is that there is a little bit more competition out there in Gracemere when it comes to the supply of rental properties. So if you are looking to buy an investment out there, I think your days on market is a little bit longer, and I think you might have to make 1 or 2 price deductions on your weekly rent to get a tenant in there, just because a lot of investors are pushed in there and bought a lot of properties. So at any given time, you've got like 20 to 25 properties available for rent. So there's a bit of competition there. Not necessarily my flavor to find, places like that where there is a lot of competition, but it's just something I think you should be mindful of if you are looking to invest in somewhere like Gracemere. 5,000 dwellings, so a big suburb, and I said it sort of stands alone out there by itself, just south of Rockhampton. Stock level sitting at 0.3%, so it's got really, really tight over the last couple of years. So right now it only has 12 listings available, so that's really contributed to this median house price doing what it's done. Obviously, these low levels of supply and strong demands have created that imbalance and pushed up prices. And as you can see there, things are selling really fast as well, with an average of 34 days on market. And that vacancy rate sitting at 1.2. And again, it comes back to, as I said, that competition and that just higher than average investor activity has really just sort of created an additional competition for rental stock there. So just be mindful of that if you are buying a Gracemere. But overall, guys, really good sort of family-friendly suburbs, good for a nice brick home, and a great alternative to like investing in town if you want to buy a brick home. Because if you were to buy a brick home that's been built in the last 25 years in Rocky itself, as opposed to out at Gracemere, you'd be looking at having to spend over $600,000. So yeah, Gracemere offers really good value for money for those brick homes out there. All right, under 600,000 buying in Gracie. I would look at something like this: 3 Philwood Court, Gracemere. It's a 422 on 722 square meters, and you can see there the price go between 500 to 550. Now in Gracemere, what you'll actually find is you've got these what's called like owner-occupier builds or boutique construction properties like this one, or you've got what's called spec homes. So there are a lot of spec homes in Gracemere, and unfortunately, if you buy one of those, I think they're not the greatest investments. Why? Is because there's like over 2,000 of those spec homes that have been built there, and they were built predominantly to service the rental market and for investors to consume rather than for owner occupiers to live in. So they're generally all the same looking, they're all the same size, they've got the same sort of configuration. The only thing different that they changed was generally like the facade or like some of the sort of internal fixtures and fittings. And they're very easy to spot. You can find them very easy in Gracemere just by simply scrolling on realestate.com, and you'll actually find, oh, that one looks very similar to this one. And that's because they're spec homes. So don't buy those spec homes. Find properties like this that have that owner-occupier appeal, that have been built boutiquely for the owner occupiers, not renters and not investors, for owner occupiers. And if you find those, you'll do pretty well. And I think from a location perspective, what you'll find is that in the established part of Gracemere, where you're closer to the shopping precinct, in and around where the water tank is, I think that part of Gracemere is where you'll find a lot of the stock like this. And towards the southern part of Gracemere is where you find that higher concentration of spec homes. So I would, from a pocket perspective, push it to be closer to that shopping centre and on the northern flank of Gracemere rather than on the southern flank. This property was on the southern flank, but again, it's one of these owner-occupier style properties, and my preference would be to find something like this a little bit on the north as opposed to the south, but I would still buy something like this. All right, coming in at number one, the top dog is a suburb called Frenchville. Frenchville is another north side suburb. So we've seen the north side of Rockhampton really dominate the list here today, which is basically not surprising at all. I think for the most part, the north side of Rockhampton probably is the better residential area to live in, and then the south side probably doesn't offer as much from a residential living perspective than the north. So Frenchville coming in on top, and yeah, Frenchville, I love the suburb, guys. I really like Frenchville as a residential area. It's a unique suburb because it's old, but it's also new at the same time. So it's got a good cross section of properties there, both old and new, and it's got an interesting demographic makeup, right? You got sort of a blue collar section of Frenchville where you got sort of more cheaper homes, and you've got actually like a really white collar professional area where homes sell like for very upmarket prices, right? So even up to over $1 million. So Frenchville is quite a big, diverse suburb, and that's kind of what I really like about that. And it offers a lot of really good opportunity as an investor. If you can pick the right property in that suburb, you'll be able to do very, very well. Now, we can see here that it's been smashing the views for every property that's gone online. 1,849 unique views, so a lot of eyeballs there, guys. And I think that's predominantly been driven by, obviously, its owner-occupier appeal. Frenchville is very desirable. It's got one of the best state schools. It's got a lot of the best sort of walking tracks. It's got some of the best parklands for families, the best leafy green streets. So I think Frenchville, for the most part, what's been driving these views is owner occupiers just wanting to live in that suburb because it's very clout chasing. It's a very cloudy suburb, right? It's a very statusy suburb, and a lot of people want to push into that market as a result of that. We can see here that its median is currently set at $554,000. Now, as I said, you've got sort of a combination of old and new properties and a combination of sort of blue collar demographic and white collar demographic. So what you'll find is that in the more affordable part of Frenchville, most properties are selling for like around this sort of 550 price point, and in the white collar part or the upmarket area, pushing over 800,000, over 700,000, even up to $1 million. So with that said, I think this median house price in that affordable section, providing the other parts of the market, the upmarket areas continues to grow, I can't see any issue with this median house price continuing to grow as well. Because a lot of property commentators have said, oh, Frenchville's had its run, but I don't believe so. I still think it's got plenty of heat in the marketplace and plenty of wiggle room to grow because it's got such good fundamentals to it and really good appeal. So that median house price of 554, I think that can get to at least 650 in the next 1 to 3 years for sure, if supply remains low and demand remains high, and we're still in the same interest rate environment. I definitely think that's possible. So just over the last 12 months, it's done 15.6%. The rental market is currently sitting at $530 per week. Again, you probably have to treat every property on a case-by-case basis. You can get a lot more higher rents in Frenchville, particularly in the better areas and the better property types. You'll be getting north of $600 per week, and we've got heaps of properties in Frenchville that have achieved that. And you can see here that, yeah, the rental market has probably slowed down a little bit, and it's grown over the last 12 months, 2%. I still think that rent could push up to at least $600 a week in the next 1 to 3 years. I believe that rental desirability and that element of scarcity for rental properties in this suburb is going to continue to push up rents. Dwellings, 4,000 dwellings, so it's a pretty big suburb, just slightly bigger than the other few on the north side. Um, so one of the sort of more bigger established areas of Rocky, and has that newer section as well, which is quite nice, where you get those brick homes and those upmarket properties. Stock level sitting at 0.3%, so stock is very tight here, guys. Supply looks very low, demand is strong. We've got roughly around 14 listings on the market right now. 32-day on average for days on market, which is great. Properties are selling very fast there. And then the vacancy rate sitting at 0.9%, and that equates to 23 listings. So a little bit higher than those other suburbs when it comes to rental listings on the north side. But again, Frenchville is a little bit bigger, so it would come with a little bit more availability. But yeah, I think anything on the rental market here will rent pretty fast and generally at a premium. We've had no issues with all of our properties that we purchased in Frenchville over the last 7 years. They've all rented in a heartbeat and generally at a premium, and they've had very, very, uh, very good vacancy rates, right, or occupancy rates over the course of the ownership across the portfolio of properties that we've acquired there. But yeah, guys, Frenchville, great suburb, family friendly, owner occupier appeal, has some good schools, has a blue collar area, has an upmarket area, and I think if you can invest in this suburb and get in now, I still believe there's plenty of upside in this area. Okay, I would buy something like this if I was hunting in Frenchville, uh, 237 Flanagan Street, Frenchville. It's a 3-bedroom, 2-bathroom, 4-car property on 607 square meters. Currently on the market for offers over 539. I think this is likely to sell for what, around that 560, 570 mark. Again, similar to that property I showed you guys in Park Avenue, it's that combination between sort of brick at the bottom and weatherboard, chamfer board, hardy plank on top. So you've got that 2-story dual occupancy. And again, this one is probably a little bit more modern than the one we saw in Park Avenue. But these are the ones that I would look at acquiring, guys, where you get that dual occupancy again. You have that ability to build out that downstairs. You get that additional floor area. These properties have plenty of owner-occupier appeal. If you can find the ones with over 600 square meters and with side access, you have the ability for a share to pool. And Flanagan Street is a really nice, quiet residential street as well. If you can target the quiet residential streets in Frenchville, I would say on the pocket closer to where the Frenchville State School is, or on the east side of Dean Street, I think that's where you're going to outperform the marketplace and do very well as a property investor if you can push into that part of Frenchville and acquire something for under 600,000. And then, yeah, I believe you won't have any issues renting those as well. And long term, as an investment, you'll do very well because of that. Location and because of that demographic makeup in that area. A lot of people pushing into Frenchville and want to live in Frenchville because it's a very statusy sort of suburb as well, similar to the range on the south side of Rockhampton. But yeah, guys, check that one out. Have a look at it. That's what I would buy if investing in Frenchville. Hey family, thank you for tuning in today. I really appreciate if you've stuck around all the way to the end and you've got the insight you need now to go out and navigate the Rocky marketplace. My name is Troy Samsini, owner and head of research of Life Buyers Agency. Again, if you are an investor that's struggling and you still don't know what you're doing, you need help, you want to buy something off market, pre-market, you want to buy something under market value, you want access to the better quality deals, you want to make money, you want to get good rental returns, speak to me and my team. More than happy to have an initial chat to see if we can add value to your investment journey and see if we can get you to where you want to go. Give us a call on that number, visit us on that website, and we can go from there. Thanks, guys, and I'll see you again soon.